Hi there, welcome to a Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. So please be kind if my ability is underwhelming to answering your questions or just replying to your comments. I'm doing the best that I can. I'm only human and I can make mistakes. Now, I do get quite a few comments these days, and that means I probably won't get through all your questions and comments. So I'm going to start with Traderhooper. Sorry, say something soothing. I might answer or reply to your question at a later time, reply to your comment at a later time. Traderhooper just mentions here, I find Section 8 in the cash flow report to me misleading quite often. And I probably would say, because I did mention this in looking at Spark Technologies Appendix 4C they released yesterday or the day before, and this company has zero cash receipts, but they released a operating cash flow positive quarter. How can that be? Because government tax incentives and whatever it's called, I think it's government grants and tax incentives, that's it, are put into the operating section of the Appendix 4C. And I don't agree with that. I believe that should be put into the financing section because it's not part of the operations. In fact, a company doesn't receive government grants and tax incentives every single quarter. I think maybe it might be once a year or 1 quarter a year, maybe 2 quarters a year at the most. So I do find even that little section to be a little bit misleading. So you do have to pay attention to those sort of things. And Section 8 is a really blunt look at cash burn of the company. And that is what Traderhooper is saying here. So he goes on, so many junior companies don't have a regular cash burn. I think it's quite typical for costs to change dramatically from quarter to quarter, depending on what the company is doing in that quarter. Example, planning, drilling, running trials. But Section 8 assumes the burn rate to be fairly consistent. And that's exactly right. Probably put it better than I did yesterday in that video. Yeah, Section 8 assumes burn rate to be really consistent. And it's not true. And I'll just go back to Spark Technologies, and we'll have a very quick look at this again. I could bring up another company, but I can't think of any company offhand right now. So, for instance, Spark Technologies receives a customer zero, but they're operating cash flow positive $381,000. Why? Because they received $1.1 million in government grants and tax incentives. And whenever I see that, I actually take or subtract that government grants and tax incentives from the operating cash flow. And to my calculations, this company was operating cash flow negative by about $800,000. And I think that's a better indication of how the company is performing. Again, no cash receipts. This company is still a story stock. And if we go to Section 8, which is and can be an important section, because what the ASX is trying to see here is how many more quarters do you have of cash on hand? And if you don't have a lot of cash on hand, how are you going to remain in operation, even though this company technically is not in operations? How are you going to finance all the things you're going to do in the future? And if they have less than 2 quarters of cash on hand, they have to answer some questions in regards to that sort of thing. But remember, this company was operating cash flow positive by $381,000, so they didn't have to answer this. But even if they were operating cash flow negative by $800,000, they wouldn't have to answer this anyway because that's 2.5 quarters of cash burn. But as Traderhooper mentions here, they assume, or the ASX just assumes, that the burn rate is fairly consistent, which is absolutely not true. I'm not sure what the better way to do it is. Maybe it's the average cash burn over the past 4 quarters. I think that could be a better way. This is just looking at 1 quarter, so it can be quite misleading. Anyway, so very good comment from Traderhooper. Definitely deserves a thumb up. However, I give every single comment and question a thumbs up, except ones that might be too negative or something like that. I don't know. Okay, KMVC7IY. I'm not sure how people come up with their names, but we have to accept it. Do you think there's potential in Clarity Pharmaceuticals based on its chart given the recent announcement? That was a fast tracking. I think it was a fast tracking, FDA fast tracking. I'm not sure if this would be a surprise. There was US FDA fast track designation. You'll notice share price was only up 1%, but if you look at the high of the day, $4.69. So we did see a fair bit of volatility during the day, which is probably understandable because of the chart and because there's a little bit of negative sentiment and the trend is actually in a down. downward spiral, maybe you could put it. And so whenever that does happen and you see the share price pop up, you will see a bit of pressure on the share price. And that is what we've seen with Clarity Pharmaceuticals. This is also not the sort of announcement that would get me overly interested in a company if I wasn't paying attention or already paying attention to the company. So I actually did see this announcement and I actually didn't even click it open. It's sort of in the title. FDA has designated their fast track, whatever, which I think might have been expected. Anyway, so let's have a look at chart for Clarity. If I was trading this, I probably would not be in it right now. And beautiful trend up. In fact, the breakout for Clarity happened all the way back in July 2023 at a share price of 80 cents. So the share price went from 80 cents to a high of $9, a nice little 10-bagger. And that was before, that was high. That was not when the trend changed. I would say the trend changed about a month ago, around about, in fact, you can see the share price fell through there was a resistance level here. I'm going to get rid of this orange line and instead put a dashed line, which I usually have or put in place to indicate resistance and support. So around there, it's not exact. I would say it's more of a zone. In fact, if I really had to put a price, it'd be right there at 650. There you go, sort of a round number. Not exactly a round number, but 650 is or was an important level, or around that level, that price was an important level for this company. And the reason I say that is in the uptrend, the share price it took a bit of time. It took a bit of effort to get above 650. It got to 650 back in July, fell away. And then it went above 650 on the 22nd of August. And that was on a really good day. Share price up 8.9%. So a bit of effort. Share price actually tested 650 on the 4th of September. The first real indication of maybe some bad juju coming into place for Clarity Pharmaceuticals was on the 4th of October. Share price on that day fell 12.14%. And that was a subtle shift in sentiment for this company. Can't really see it on the chart just yet. You need confirmation, but then the share price just dove. Hit 650, and you'll notice the share price stayed above 650 for a while. And any single time during maybe a 2-week period, share price fell below 650, we saw some buying coming in. The share price started to move up again, and then another really bad day. And that was on the 18th of November. Share price fell 15.4% on that day. I can't remember what day was it again? My memory can be bad sometimes. I was just looking at it. 18th of November. I can't remember if they released anything on that day. 18th of November, head-to-head IIT or 2, whatever, with SAR Biz PSMA. This is probably an announcement I didn't really look at all that closely. Market didn't like it. Share price fell below 650 on strength. And that is what you're waiting for to see a share price break either resistance or support levels. You want to see a bit of strength coming through. And we saw that. And lo and behold, once it broke through it, it remained below. And that was, over the next few days, that was confirmation. If I was trading this, I probably would have sold either that day or the next few days. We did see the share price rally and try to get above 650 again at the end of November, and it failed. And then the share price just started to go down. So the share price right now of Clarity Pharmaceuticals is in a downtrend. And yesterday, Friday, the 24th of January, does not change that at all. In fact, I would say this is a negative candlestick. So, I have not changed my opinion of Clarity Pharmaceuticals based off what happened on that particular, or with that particular announcement. And if you do have a look at like the 5-minute chart, you'll see there's a fair bit of selling during the day. Probably the peak of the share price was on open. Yep, on open, and then we saw selling all through the day. So that's that will be the retail investors getting tripped up, getting a little bit too excited, and then the experts came in and not swallowed up the shares, but dumped their shares on market. Anyway, so definitely the Clarity Pharmaceutical share price right now is in a downtrend, and what we need to shift sentiment and the trend is, well, people either seeing investors not wholesaling, but broadly finding some value, or the company releasing something really powerful. And this announcement on Friday was not powerful enough. Okay, so that's Clarity Pharmaceuticals. Thank you, KMVC7IY. Your friend, Jamin. Yeah, I'll look at this one. So I'm going through these questions and comments fairly quickly to see which one I can just leave out and just focus on some interesting ones. Not that the other comments aren't interesting, but I do like this question about Cettire and also Clinuvel. Cettire has a year-long flag, and we're at the taper. we're also in a support zone. There's a possibility your Frenchman is more of an expert on flags and pennants. Let's Google flags and pennants. I sort of do know this shape, but I do get flags and pennants a little bit confused. Flag, technical. Yeah, I'll just see what I've been looking at. Flight Center. Anyway, flag, technical analysis. We're just looking at one image. All I need is one image. Here's some flag types. Oh, there's quite a few. And in fact, I just wish this. Where is it? Just want to zoom in a bit. Yeah, there we go. Flag. I do know. I do like this. So share price going up really quickly, and then you see a little bit of a pullback in the share price. You can see it, and usually you do see fairly low volume as the share price goes through this, and then you see a next leg up. That's the one I would think of when I'm thinking of flags. Well, that's the image that would be evoked if I'm thinking flags. The bearish flag as well. Maybe not the bullish wedge flag, and I can see the difference between the pennant and the flag here. The flag, the two sides of the flag, looks like a flag, I suppose. And the pennant, it's like a triangle. Okay, I'll try to remember that for the future. Anyway, so let's have a look at clarity and see if we see, not clarity, Cettire, see if we see that flag. The other thing to notice is, what was the question again? Year-long flag. I always would consider flags and pennants, and again, I'm not an expert, I would always consider flags and pennants to be short-term, shorter term than like a year long. Again, I could be completely mistaken. I would actually define this. I think I can see what it. No, so we're going all the way back to like, I don't know, no idea what he's talking about here. But if the share price of Cettire didn't go bananas back in September, October, I would say Cettire share price has been sort of basing, going sideways, consolidating. That's about it. I don't have any interest in Cettire's chart right now. A nice little support level at $1. Funny enough, at the bottom of that support level, or that zone, the trading zone, trading range, is at $1. So $1 is an important level for this company. Share price currently $1.29. I'm not sure where to get this 1 year flag here. Not sure. I don't see it. Maybe the weekly chart. So maybe 6 months. Because 1 year ago, the share price of this company got as high as 480 back in February. Geez, 480. There you go. Anyway, so I'm not sure exactly what you're seeing there. And as I mentioned, I always consider, and again, I'm not an expert, I'm just trying to make this line straight, always consider flags to be short term. And for me, what we're seeing here is more of a longer term consolidation zone. But yeah, if the share price didn't go bananas, yeah. The other one was Clinuvel. And what did you say about Clinuvel? 4 years? Clinuvel 2, but 4 year long. Maybe that's what I should. Can flags last 4 years? Last 4 years. See if there's anything up here. Well, in Investopedia, it says price characterized by a sharp counter trend of flags exceeding a short-lived trend. Doesn't mean they're right. Although Strike Money also mentions strong trend. I'm not sure if there's any time limit on it. I have no idea. Again, I'm not an expert. So let's have a look at Clinuvel. And we'll focus on if we have a look at the daily chart for Clinuvel, it looks pretty negative. It does look really negative. The thing that interests me about Clinuvel right now is not so much the chart, it's the valuation of the company and the possibility the market has got this completely wrong. For instance, this company is growing, still growing, and the P/E ratio, I would assume, is like 16, 17. Yeah, 16.74 right now, according to Traderhooper. And that seems really low for a company that is growing at a pretty good rate. In fact, let's have a quick look at Clinuvel's growth via FinChat. Let's have a look at Clinuvel. Now, it's a one product company, and that is a slight red, well, maybe not a slight, it can be a red flag. Now, via FinChat, P ratio 17.1, so fairly similar than TradingView. But if you look at the growth in revenue, we're talking about 22% over the last 3 years, 23 5 years, 42% 10 years, earnings per share growing at 13% per year, dividends growing at 26% per year over the last 3, 15% over the last 5. It's growing. Dividend yield is fairly small, but I wouldn't really pay attention to the dividend yield. Yes, so return on equity 22.5. There's a lot of things to like about this company and the possible pretty good value at these levels. And then you look at the chart. So probably the best way to play Clinuvel right now is depending on the quality of the company. Do you think this company is high quality? I probably would question that just because they are one product company. If they were a more diversified company, I would be really excited about Clinuvel right now. Chart does worry me. What does the market see that I am missing? Market definitely sees something, but again, there's a possibility the market is going to be wrong. Yeah, there's a possibility the market is wrong. So if the market is wrong, then this is an opportunity. If we have a look at the weekly chart, yeah, that price of, if you have a look at the daily chart, I did put a line here, this support level at 12, was it $13? Yeah, about $13. It broke through that in November and has kept falling. That support level has been in play since 2009. No, that was COVID-19. So share price of this company during COVID-19, during the time when the market was really pessimistic, the share price has fallen below that. And the company has grown significantly since then. So we have reached peak pessimism when it comes to this company. And when there is peak pessimism, that can create opportunity. So that's my thoughts about Clinuvel. Now, if you do have a look at the last 4 years, I don't see any flags. Again, this is a 4-year period. Now, I could be completely wrong. I don't see any flags. And I would, when I think flags and pennants, I think shorter term. So I definitely think shorter term. And I'd love to hear from some more technical savvy people out there. But I don't usually look at these sort of signatures. I'm just using moving averages, announcements from companies, volume. That's the thing I look for. But I do, and sometimes do see these flags or pennants. I was going to say pags or flannets, but that's my spoonerism coming into play. I do on occasion see this, and I do like them when I see them. And typically when I see them, I'm thinking very short term. I'm trying to think of a flag or pennant that I can think of right now. I can't think of one. Anyway, that's Clarity Pharmaceuticals and Cettire. Rick Thelian, nice overview. Talking about Kogan, nice explanation that I put in. Midway, KMD didn't seem to change its normal trading patterns. And yes, my state gets treasury approval to buy ABA Bank, Auswide Bank or something. Anyway, congratulations, Michael, 3 in a row. What did I get 3 in a row? Oh, that's right. Yes. Picking how many companies up or down in the ASX 20, 3 in a row. I should retire right now. Just James Dean says, Magnificent 7 are great quality. Yes, I think I do own most of the Magnificent 7, except maybe Netflix. What other Magnificent 7? So Apple, Amazon, Netflix, Nvidia, Alphabet, is Netflix in it? Magnificent stocks, what are they? Oh, I don't have to click on that. I can just click on this. Meta, forgot about Meta. Oh, Microsoft, of course. Tesla, is that Magnificent? I don't know. Amazon, Alphabet. So Netflix is not there. So, in fact, I own all of these. I own all of the Magnificent 7. And because one of the reasons I do own them is I think they are very high quality and they are positioned perfectly for the future of this world. And I think these 7 companies, maybe not all of them, but definitely the majority of these 7 companies will benefit significantly from AI and automation. And that's one of the reasons I do own them, and interesting times we've got. So definitely high quality. Are they worth buying at any price? No, nothing is worth buying at any price. PE getting pretty high. I would push back on that. The only one I definitely would push back on that is Alphabet. I wouldn't push back on Apple. I think Apple is overvalued. And some of the others I don't know. Nvidia may or may not be, but I think there is a more of an argument that's undervalued than overvalued. But I would say Alphabet, there is a case for it being undervalued. P ratio is 26. And the reason I might say that is if you look at the historical ranges, I haven't done this for all these companies, by the way, but whether these companies are expensive or cheap is I'll just have a look at the P ratio, historical P ratio of a company. And this is Alphabet, currently 26, and it's actually on the low side, if anything. Let's do that for Microsoft as well. So if you go back to like 2015, 16, Alphabet had a P ratio 30 and above. So the lowest it's been is around about 17, and I'm pretty sure this was in November 2022, and November 2022, and I keep forgetting it's Alphabet. I think the ticker code is GGGO. Oh, don't do that to me. And I'm pretty sure I bought this in late 2022. Let me have a look. I bought Alphabet in September 2022 when the P ratio was September 2022, when the P ratio was below 20. And I think that was one of my criteria. When I saw the P ratio get below 20 for Alphabet, I went, this is a buy. No-brainer buy. And you very rarely see the P ratio of this company get below 20. So it's rallied since then. Microsoft, let's have a look at Microsoft. This is one that interests me. I wish we could actually change. I want to stick to the P ratio history. Can we just change the company instead of going through this whole process? Now, sometimes when you look at P ratio of a company, and you can see here there's big jumps up and jumps down. It's one of the problems with something like this sort of metric, because there could be one-offs that affect earnings. So it's not the best metric to look at, but sometimes it's okay. And the P ratio for Microsoft is probably at the high end. If it gets above 40, I'd be saying, yeah, maybe it's on the expensive side. If it gets below 25, on the cheap side. And I bought Microsoft. Let's have a look. MSFT, is it? And I bought Microsoft. There it is, in February 2023. February 2023, when the P ratio was around about 28, 27, 28, which was on the low side, not quite 25, but getting there. And I'm pretty sure, I can't remember why I bought Microsoft. Actually, no, I do remember now. Microsoft was just a breakout. There was a downtrend, and I bought this just on the breakout. I wanted to buy it, and then I bought it on the breakout. Yeah, there it is. I was following this. Share price was in a downtrend, and I bought on breakout. And I should have been a little bit more patient, because it tested the breakout or the downward trend line. It tested it just after I bought, 2nd of March. There you go. So I wouldn't say they're really high. The very fact that CBA has a P ratio above Alphabet is insane. That's insanity. That's prime example that there is definitely an argument that sectors of the ASX are widely overvalued. Maybe not sectors, but companies. And CBA is the poster child of overvaluation on the ASX. I don't understand why anyone will be buying CBA right now. It's there's way more risk to the downside than going up. So it's asymmetrical risk right now. Is that the good way to say it? There's asymmetry towards risk instead of reward with CBA. That's a problem with this bank right now. I can see way more likelihood of downside than upside. Okay, I think I've said that enough ways. So thank you for Just James Dean. And I think when it comes to quality companies, and I did this in 2022, 2023, I waited for a downtrend or downturn in the market. And then as soon as I saw that, I just started hopping in all those companies. I bought quite a few over a short period of time. That was my introduction to the American market. I had not bought any American companies before that. PayPal was my first one, and I just saw PayPal just kept on dropping. And I'm pretty sure PayPal now is in profit because it's a beautiful trend. I also decided to start trading PayPal because it was a no-brainer. Oh, there's me buying PayPal at the start of 2022. This was my first one. I just saw value and the share price kept on dropping. And then I bought a trading parcel right there. And yeah, we've seen definite shift in trend and sentiment in PayPal. PayPal definitely, well, I wouldn't say PayPal is high quality. Yeah, but I just thought it was cheap. Eats day traders for breakfast. Are you not concerned about Bioxyne's diluted shareholdings? Around 2 billion. I'm not. Okay. I do have a look at the shares on issue. And if it's below one, well, it depends on the company. It's all relative to the company. For instance, what's a company? Google. I've been talking about Google. This has a lot of. I'm pretty sure Google has a lot of shares on the issue. 5.14 billion shares on issue. That doesn't concern me for this company. So it's all relative. It depends on the company. I owned was a company called I still own Brookside Energy. That had 5 billion shares on issue, and that was a problem. I still took a position in that because I thought there was good value. Then I did a share consolidation. I have no problems with that. So once you get above a billion, depending on the size of the company, I do have concerns. With Bioxyne, the problem with that company, shares on issue 2 billion. Also, when I took a position in Bioxyne, the share price was 1.2. And one of the things I do see a problem with is when a company has a lot of shares on issue and the share price falls below 1 cent, you see a lot of pip trading happening after that. This was a little bit of concern for me when I took a position in Bioxyne. It was a small position initially, but I just liked what I saw with the company happening. So I sort of disregarded shares on issue, disregarded where the share price was, and it's turned out well for me. Now, this could have gone pear-shaped, and the share price could have fallen to 0.6 cents, and that would have been awful because not long before I bought, the share price of this company was at 0.4, 0.5 cents. So this could have gone the opposite direction. But at this point in time, it's moving in the right direction, and the company just issued a revenue upgrade. So I'm not concerned about the shares in issue right now. 2 billion, yeah, it's getting a little bit too high for my liking, but it's not the sort of thing that would limit me from taking a position. But it is a slight red flag, just a slight for, well, not as much as a red flag now because the share price has risen. But when I bought, it was a red flag. Hopefully I've answered your question. Yeah. Just James Dean talked about how much wealth I need to cash flow my mortal life. Well, by the end of the universe, what's the point of having any cash? Anyway, I'll answer that. That's a more, how much wealth do you need to cash flow your immortal life? If you just leave out your immortal to cash flow just immortal, how much wealth do you need to cash flow your life? That's actually a very important question because we all want to get to that point, don't we? So I might answer this question at a later time. Ooh, and then we're up to date. At here now, or Athen, AUY 5341. How about selling high quality companies when it crosses debt below the 200-day moving average and buy when it crosses above the 200-day moving average? Ride through God times only, avoid loss as well at the market when it's going down, but they're only when it is going higher. I think that is a valid strategy. That can be a valid strategy. Let's test that strategy, a very rough test of this strategy. So looking at the 200-day moving average, and let's focus on high quality companies. So we'll go to my high quality company. Here it is. This is my high quality American holdings. Not all of them. I do have some other in my other portfolio, but I will focus on these group of companies. And what I'll do is look at daily chart, and we'll put in 200-day moving average. Oh, got a bird outside the window. Hello. Oh, it's run away. Well, flew away, not run away. So now we have 200-day, 100-day, 25-day moving average. We'll have a look at the long term. Well, yeah, so PayPal, definitely this would have been a really good one. So you would have bought PayPal back in April 2020 and then sold it back in October 2021, and you would have missed all this downtrend in the share price. Would I consider PayPal to be high quality? I'm not sure I'm there. I do see value. By the way, it's turned around again. So you're buying back in August, just based off that little strategy. It's a solid strategy so far. What about Amazon? Uh, so even Amazon, looking over the last few years, it looks like you're going to get false hits. So, for instance, if we go back in time, uh, so you go back in time, the share price moved into a really nice uptrend in February 2015, but then the share price fell below the 200-day moving average for a brief period and then went back above. So you're buying and selling in a fairly quick period of time. It hit the 200-day moving average in November, and then you could see a lot of volatility back in 2018. What you could do is use the other moving averages as well. What you could do is when you do get a moving average crossover, maybe that's another strategy. But you would have had a really good holding in Amazon for a long period of time. So you would have had a holding in this company from 2016 all the way through to 2019, so a 3-year period when the share price went from $30 all the way up to $80. And since then, there was another really good run here as well. And then you probably sold out, and then you bought back in. And here's another one. You can see the share price drop below 200-day moving average for a brief period. So you do get these false signals. So that was my main concern, getting some false signals. What about Alphabet? I don't think I'm going to go through all these. And again, another false signal with Alphabet. In fact, I'd probably be more inclined to be buying Alphabet at this point, not selling. You're getting a few false signals here. And what's the other one? What's another one? Microsoft. What about Microsoft? I would say the same thing. You're getting false signals. On occasion, you get false signals. Even the last year, we've been getting false signals. In fact, the 200-day moving average for Microsoft has been a nice support level. We've seen the share price bounce off that on seems like every single month. Anyway, you could use this strategy. I do like using the weekly 200-week moving average as indication to buy. It does it perfectly with Microsoft. Yeah, I think I've already shown that. There's different strategies out there for everyone. If you like this strategy, go for it. I'm just a little bit concerned about the amount of false signals and just selling and buying back in. But if we do get a significant downtrend, this could be a really good strategy to protect your capital. And to be honest with you, as an investor, we have two goals: to grow our capital and to protect our capital. And if you listen to a lot of experts, they're just focused on growing your capital, not protecting your capital. They don't care about that at all, it seems like sometimes. They just think you should be in the market 100% of the time. But I believe protecting capital is very important because ultimately you want to grow your capital as much as possible. And a really good way of growing your capital to the best of its ability is also to protect your capital when you just see a massive downturn in the market. Because those experts might lose 70% of their capital if we have or go into a serious recession while you're protected your capital. And when the market starts to turn up, you can deploy that capital. They can't deploy that capital because they're fully invested, and they can't deploy anymore because they're fully invested and the capital's dropped heaps. Anyway, so there's definitely arguments that sort of strategy, even with high quality companies, selling them when they're in a downtrend, that could pay off. It's just what sort of strategy, what are you looking at? And maybe 200-day moving average could be it. But again, false signals. Happy now. Okay. Not sure why Neil Weston says Wales Kneppy. It could be good, could be bad. I don't know. Carnot Sales says here, this person wants me to do semi and hack when it comes to ETFs. So I'll be doing that, I think. Gazbo says Novo Nordisk is an interesting leave. So this is one I do own, by the way, Novo Nordisk. And the chart looks, it had a nice day, up 7%. The chart has turned a negative. Chart has turned negative after. So this could have been, if using that 200-day moving average, selling it, it's September, at a much higher price than it is now. But I do think this one's going to be quite volatile. It's getting to the point where I think there is some good value here. I'm not sure what caused that increase in share price. Let's have a look. Novo Nordisk. I don't remember this on the Nordisk news. Here we go. Why Novo jumped and took out Lilly and Viking stocks. Okay, they did report results. Here we go. Reported strong results for its next generation weight loss drug, amycretin. I'm going to have a closer look at this. This is something I should be looking at a little bit more and more for companies I am owning for the long term. But this is definitely a long-term own for me, and maybe this is add to my position. Actually, let's have a look at the weekly chart. Is this at the 200-week moving average? Oh, there you go. 200-week moving average. High-quality company. It's bounced off, it looks like. It's just above it now. Okay, there you go. 200-week moving average. Novo Nordisk. If you think this company is high quality, maybe now is the time to take a position. I'm just going through this fairly quickly, just trying to find interesting comments to look at. Here's one from Hard Worker. Hey, Kneppy, watch your videos every night. I bought Bioxyne today. Just wondering what you think about this stock. It's been on a decent run up. And hopefully you already know that I do like Bioxyne and I am trading Bioxyne. So I've already talked about Bioxyne a few times. Have a look at my Kneppy's ASX Daily Rundown video on it was the 24th of January. I do talk about Bioxyne in that video. Traderhooper also says, I know you're not a fan of hot copper, but there are some gems over there. I love Highland Lads pre-market, lunch and aftermarket updates. A quick read to give an overview of factors moving the market. Worth a look, in my opinion. I am going to take that suggestion on board and have a look at that. Actually, that does sound interesting. So I think you are probably right that there are some good aspects of hot copper, but generally, I think 90% of it's crap. Absolute crap. But that does sound interesting, that sort of thing. So I'll have a look at that next time on hot copper. Roger also says, Hillgrove Resources was a complete overreaction. That's what I'm thinking. I'm going to go back to Hillgrove Resources. They released that we knew their quality was going to be a little bit lower this quarter, and they released exactly that. And they expect the quality of their, the grade, that's the word, the grade of their production to be increased in the next few quarters. And the market just had a hissy fit about that, as though they didn't know it was going to happen. Share price dropped below this little support level, this uptrend. And I was thinking at 4 cents, this could be a good time to buy some more shares in this company. Share price did rally up 5%, but 4 cents is interesting. And if you do have a look at the weekly chart, it's looking interesting just where the share price is. So I was thinking of adding to my position in Hillgrove. Thank you for reminding me, Roger. Richard Goncalves would like your thoughts on OBL. Looks like an early stage turnaround. OBL, what's OBL? I don't know. OBL. And because I've been recording for a long time and haven't looked into ComSec, I have to now log back in. OBL, Omni Bridgeway, law company. That's right. Law company. I tend to be quite, what's the word? I tend to not like these sort of companies. Law, accounting, any sort of professional companies whose main talent, instead of a product, is people. I'm not a bigger fan of those because people cost a lot of money. If you have software as your talent, software doesn't want any money, doesn't want wages increases, doesn't want that, and software doesn't say, well, if you don't give me a wage rise, I'm going to go to a competitor. And a lot of lawyers would do that, accountants would do that, that sort of thing. So I tend to stay away from law companies unless I might see some value. For instance, I have traded Shine in the past, but definitely not a long term. Have traded Shine in the past, but definitely not a long term. I believe I traded Shine way back in 2017 because it looked really cheap, but I didn't own it for the long term. You can see it hasn't really done much since then. Omni Bridgeway. Let's have a look at this chart. Was it OBL? Yeah, OBL. And okay, so we'll just start with the daily chart. Okay, so I've seen different things here. Something happened on the 18th of December. the share price on that day for Omni Bridgeway, and I don't remember if I noticed this. I probably would have noticed it, but because it's a law company, I probably just pushed it away. Up 50%. No, I remember talking about this. I do remember talking about this. And I did follow it for a little bit of time, but then I'm not following it anymore. Share price has gone sideways since then. That's a good sign. I like that. Sometimes when you see a massive rise in share price, then you see a consolidation period for 2-3 months. It happens, even longer than that. And this is what's happening with Omni Bridgeway right now. I can't remember why the share price popped up, but I do remember having a look at it, and then it just faded from my memory after that. What was it again? Let me have a look. 18th of December. Oh, that's right. Secondary market transaction continuation fund. It's not ringing any memories just yet. Oh, that's right. Yeah. Ares will acquire 70% interest in Fund 9 for an upfront cash consideration of $310 million. That is triggering something in my mind. So I do remember this now, and I'm just going to focus on the chart now because I'm not sure the financials of this, not sure about the company, but the chart is suggesting that this could be a turnaround after a long-term downtrend. Share price in a long-term downtrend. Hit the downtrend back in early 2023 and is out of it now, right now, maybe. So the chart definitely does look interesting. Did I have this on my watch list? No, I did not have. I did not put this on any of my watch list, and I'm going to do that right now. But I do remember that announcement. That was a turnaround for this company. I went, that's a lot of money for a company with a very low market cap, $390 million market cap. That's why the share price rallied. It could be early. This could be the early part or the start of a long-term uptrend in the share price. It could be. Oh, Just James Dean says, corporate travel breaking out. Did I answer Doug looking good down the hill and up the ramp? I'm pretty sure I did. Corporate travel breaking out. Let's have a look at corporate travel. So I do own this, and this one did enter as a trade, entered my periphery not that long ago. And, oh, that's right, it would have been back in late November. I hit this resistance level and then pulled back, couldn't get through it. And lo and behold, during the week, corporate travel has broken out. It looks like it's breaking out. This chart is starting to look really good for a trade, at least a trade. This is starting to look really good as a trade. I will put this definitely as a potential trade, as a potential breakout. This is the sort of thing I'm looking for. Now, you might say, well, the company hasn't released anything yet. This could be the market saying or thinking the company will release something positive, a financial results or an upgrade soon. So this is the market becoming a little more positive. That might happen. So a lot of times you will see, well, probably the best way to say it is, when the share price of a company is in an uptrend, there's a better chance the company will release something positive than negative. When the company share price is in a downtrend, it's more likely the company will release something negative than positive. It's not 100%, but that is a really good rule to live by or invest in or trade in. And so when I see the share price of a company moving into an uptrend, that means the sentiment, because the sentiment is shifting, that means there's a greater chance there's good times ahead, good announcements, good financial announcements, that sort of thing. So definitely this is an opportunity for corporate travel management. I don't think it's that expensive either. So definitely one. Thank you for that, whoever gave me that. Well, already got it in my Buy Australia watch list. So anyway, thank you, Just James Dean. Sensei says, when is the last time you went overseas for a 1-2 week holiday and fully switch off? Planning a trip to India, Sri Lanka, Dubai, the thumbnail pic. Oh, yes, Taj Mahal. When's the last time I went overseas for a 1-2 week? 2017. I planned something in 2020. And that was September through November 2020. And we all know what happened in 2020. And since then, travel for me is not an absolute necessity. I don't need to travel. But the one thing about travel, and this is something I will say to every new person working, particularly people who are talking about, FIRE? What is it called? It's freedom, retire early. Something retire early. What's FI? Funds now retire early. My problem with that is I think the best way to use your money is for memories, not not crappy stuff like new TVs or stupid stuff like computers. It's memories, going away overseas or going to maybe weddings, whatever floats your boat. I don't like weddings, that sort of thing. That's not for me. I prefer going somewhere for like a hike, going to the top of a mountain. That is what does it for me. Like going to cities, Paris does nothing for me at all. Even New York City does nothing for me. I prefer nature, prefer mountains. And whenever I think about all my previous trips overseas, it brings back really good memories. And I think that is what really amplifies happiness in the end. It's spending money on that sort of thing. Anyway, so I am planning on going on a 2-month holiday, September, October this year. The only problem is how much money I'm going to spend. So I haven't really figured that out just yet. But anyway, so if I would go to India, to the north part where there's all these mountains, Sri Lanka, that's how I plan. If it has mountains, there's a chance I'm going to go. I love Switzerland, Austria, northern Italy, Austria, the French Alps, Norway. Haven't been to Norway. We really want to go to Norway. Patagonia, want to go there. New Zealand. I have never hiked in New Zealand. I really want to do that. So if you think of an area with really good mountains, really impressive mountains, really good hikes, I want to go there. And fully switch off. Well, to be fair with you, I am part-time, and I tell people this a lot at work. I'm part-time, and it seems like I'm on leave all the time. And so, in a way, I fully switch off. 14 days out of every 18, I'm fully switched off. This, for me, doing these videos is not work. It's not work at all. It's more of a hobby. Like, I am going to finish this video here. Anyway, so if you have any questions, any thoughts, by the way, I might record a chart of the day. I haven't done that for a while. Chart of the day. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this meeting. Have a good day. Not meeting. I'm reading a text. I just got received a text. And in the text, it has meeting. There's like an ENR meeting. And I just put that into what I was talking about. Anyway, if you have any questions, any thoughts, leave those in the comment section. And I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.